right, welcome back, everyone.
Hello,
Let me introduce you all to today's guest. It's a big honor. This guy has over 25 years experience trading at an institutional level. He started out way back at the London Metal Exchange, if I'm not mistaken, before specializing in the Forex market. And he's been trading for many different hedge funds and banks like Goldman Sachs, HSBC, to name a few. And he's here today to talk with us about how the banks actually trade. Paul Scott, welcome, man. Happy to have you here.
Can you hear me?
I can hear
you. You can hear me, good. Thank God for that. I couldn't hear you for a minute. I was like panicking. As you do. Right. So, yes, indeed. No, I started out, 1994, probably way before both of you were born. 30 years this year. I started out, cut my teeth on what's known as the London Metal Exchange. It's the last open outcry market left in Europe. I started at a company called Credit Lyonnais, which is Credit Lyonnais Reus, which was then taken over by Callion, which was then taken over again. I then moved from there to a company called Sugden UK Limited, which is now Sugden Financial. We've traded on an open outcry market. Like I say, totally unique experience. I've spoken to Alex about this before, but I mean, it's amazing. Do you know what I mean? There's no other job like it on the planet. It's nuts when you've got, 500-600 people shouting and screaming, market's going absolutely crazy. But other times you'd have, the market will be dead, but then you just have to be able to switch it on and I'll tell you a funny story about that later. We had one of those days and then it just all kicked off, and it was probably the funniest experience I've ever had on a trading floor because, we'll get into that. But
first of all, it's really nice to see, because we've been trying to do this for a long
time.
Andrew, we've been communicating. I first spoke to you when you were a speaker at the trading event that we did in London. You're probably the only, I shouldn't say this, but you're probably one of the only down-to-earth people in the room that I saw you, and I heard that you're going to be speaking. We got chatting, and I had to bring you on for the first time. And afterwards, we had so many requests to bring you back, and because of everything that happened, life got into the way a little bit. But it's fantastic to see you back, and we've changed the layouts a little bit. So now we're actually doing this live.
Yes.
We've got more guests, more people. And I'm glad they're going to be able to benefit from your knowledge. And Paul's device is gone. Oh, God.
Well, I think he can hear as well. If you can hear me, Paul, Alex has been saying great things about you. I'm super happy to have you on here. And as soon as your camera is back and connected, we're gonna go into and talk about some real interest. There he is. Welcome back. Welcome back.
Thank God for that. It's all right. I've got this gaming computer. I'm not really sure if it's set up for streaming. I don't know. I just bought it because the kids wanted a computer so that they could do some stuff on. And I'm 46 now. Jesus, when I started, we had Windows 95. Now we're on Windows 11. I don't know what I'm bloody doing. But indeed, it was lovely to sort of be able to give, or the opportunity to obviously speak at the event last year. I mean, in all honesty, between me, you, and all of the people that are watching, I just went there to piss people off. I
noticed that.
Yes, I went to piss people off, which is probably why I haven't been invited back this year. But it doesn't matter. At least some people got to hear what I had to say. But no, it's for me. It's that's the first event I've ever spoken at in a live situation. Obviously, I've done various interviews, whatever you call them, podcasts and stuff over the years. But it's just to get there and just say, hey, look, it's whatever you think trading is, at the top table, it's not quite what you guys do. And obviously, you know, I've been trying to share that knowledge with people over the last, it's going to be 8 years this year. And it's been fun. It's been really nice to, you know, sort of open people's eyes and just say, hey, look, you know, every market's the same. It's all traded in the same way. We all understand it in the same way. You know, contract specifications, yes, they change, and you have a slight, you know, different terminology and things like that. But fundamentally, it's all the same. So for me, it's like I can look at any market, and we'll go through this in a little bit, but any market, I can mark up my levels and I can say, right, I'm going to be patient enough to wait for markets to get to specific prices before I'm going to engage. And I think, you know, a lot of people sort of in the retail space, they want to be in a trade for the sake of being in a trade, you know, and especially when I speak to a lot of the younger guys these days, you know, they go, oh, I'm a member of this Discord group and that Discord group. And, you know, I'm talking to them and the bloody thing's got ping, 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 ping in the background. Yeah. And for me, it's just like, hey, look, as much as you want to be doing it and you want to feel part of a community, which is okay, you have to make your own decisions and don't be swayed by, you know, all this information that's coming in or other people's opinions. You know what I mean? You really sort of want to be steadfast in what you're doing. But yeah, no, I mean, thanks for having me back on, mate. I know you've life sort of really got in the way, and I was like, oh, bless you. And I see you got no bruises or nothing like that. That's good.
No, got my arms and legs, thank God. You know, what would I do without my right arm? You know,
exactly.
But there you go. But yeah, no, definitely. So,
go ahead, Alex.
What I wanted to say is one of the things that we did touch on is obviously the big difference between, you know, retail traders and how the education is for institutional level traders. And I think one of the biggest issues is the fact that retail get pulled in with all this marketing stuff, with all like IB agreements that, you know, their educators have got, or, you know, their, you know, different kind of broker agreements that they get sold to. Do you want to just tell us a little bit about your kind of insights within that world and what kind of conflict of interest some of these trader educators may have and why they kind of lead maybe the retail education the wrong direction?
Could I be really frank?
Go, be as frank as you want. We can swear.
Yeah,
of course, man. You're on here to spread whatever knowledge you want here, man.
Okay.
Go ahead.
So for me, always conflicts of interest. First one for me is if you log on to a broker and it has an educational section. I mean, that's just taking the piss completely. I mean, who the hell is going to teach you to take the broker's money? I mean, that's a massive conflict of interest. You then have, dare we say his name? He spends a lot of money on YouTube advertising, and he's buggered off now to Dubai because he's obviously pissed off so many people around the world with his totally shit education. I think we know who I'm talking about. Yeah,
there's a bunch of them out there, aren't they?
Mr. Permatan. Mr. Permit had to leave the UK because I think, he kind of annoyed a lot of people, and I think he went over to maybe New Zealand or Australia and annoyed people over there. Now he's in Dubai, bless him. But I mean, if you've got to spend, sort of upwards of £500,000 a month on advertising, where you've got to ask, where does that money come from? It comes from unsuspecting people, and it is all about marketing, like you touched upon, Alex, and it's terrible. I mean, it's not a proper education. You've got, again, like you said, people sign up with my course, you've got to sign up with this broker, and of course the conflict of interest there is they're getting paid on the back end whether you win or lose. So frankly, they don't give a toss if you win or lose. They're just getting paid at the end of the day. So there are huge conflicts of interest, IB agreements. Oh God, the amount of people that send me messages on LinkedIn, hi, would you like to be an IB? I'm like, no, I don't IB for anybody. It's a huge conflict of interest. And for me personally, it's like, look, whoever I teach or whatever, or whoever I speak to, you're free to trade with whoever the hell you like. I'm not going to sit there and be affiliated with anybody because, again, that causes a conflict of interest for me. I can advise people, not advise because we're not allowed to advise. So it's not financial advice, as it says at the bottom. But then when people are talking to me and they say, where would you go? And I would say, well, look, go to a broker that offers you the best spreads. You know, if you've got to pay a commission, you've got to pay a commission. That's just part and parcel of bloody trading, you know, and especially with the method that I teach people, which is to hedge, right? Hedging, I mean, again, is something that is never really touched upon in the retail space. But I mean, it's a case of saying to yourself, hey, look, at no point in my bloody life am I ever going to be completely in control of the foreign exchange market or any market, put it that way. And what you want to do is you want to treat trading like a business and hedge, because what you're then doing there is you're basically saying to the market, look, I'm taking my ego out of everything. I'm not overthinking anything. What I just want to do is I want to find out in which direction the market wants to go in. So at certain places, what you're going to see is volatility. Now, volatility is our friend. This is how we make money. Institutions are always hedged. So what do? We make money on volatility. So we don't care if the market goes up or down. And again, that's, you know, within the retail space, it's all about very much picking direction, which I think is kind of stupid, because that's very subjective. And then, you know, it all comes down to view, the human being, and how you view things. And, you know, because you've taken a view, or you've picked a side, let's say, we've screwed up already, because you've emotionally, you've got an attachment to it already, which is not a good place to be. You can't be emotional when you're trading. It's just like, look, market, all I want you to do is move. Direction, I don't care. And if I don't care about direction and all I care about is movement and volatility, that's how you would trade as an institutional trader. Do you know what I mean? So, I mean, when I teach people in the States, for some ridiculous reason, I don't know why, but how much money got lobbed at Congress about this is unbelievable. But they can only trade in one direction, right? Because apparently mitigating risk for a retail trader is risky. Don't quite know how that works, but right, what can they do? Well, if you're looking at FX, you can trade spot, but then hedge with options, right? So again, it's like which way this market moves, you're covered. Do you know what I mean? But you want to have sort of, you know, definitive stop losses and take profit targets. And everyone must remember, a take profit target is a target. You don't always hit them. So you've got to be able to sort of, you know, manage trades. People often talk to me about risk management. I kind of boil that down as nice and simple. If you're going to risk 1% either side, your total overall risk is 2%. That's it. Job done. Do you know what I mean? It's nice and simple. Yeah, I don't like retail education. I did make an admission, and I don't know why I said it, but I did do it at the time. Obviously, when, you know, look, we were doing the speech, you know, the presentation and everything like that, and you then asked me to go and do this sort of, what did we call it?
Podcast? No,
not the podcast. The bit where I'm on stage with another 3 guys.
Oh, the panel.
The panel discussion, that was it. Sorry, the panel discussion. And so I jump up there, and I was late because I was talking to people outside in the hall, and I was late, and I sort of ran up to the stage, got a mic thrown at me, and then was just like, oh, so what would you recommend, Paul? And I was like, sorry, I missed the question. And the question was basically something along the lines of, is there something you could say right now to these people in this room that would help them in trading? And I said, yeah, stop listening to these knobs on YouTube. Right? Which, you know, again, I understand the irony, and I said this to Alex last time, the fact that these things do go up on YouTube, but it was like, you stop listening to these people. This might sound like I'm blowing my own trumpet or being very arrogant, but I actually worked there. I actually did it as a job. So if you've got people that haven't worked in the industry and haven't done it as a job, quite frankly, you shouldn't really be teaching people. But that's just my opinion, and obviously I'm, you know, entitled to mine, and everybody is entitled to theirs. But it's, yeah, for me, it's kind of, it's scary because anybody can do it.
Yeah.
Yeah, I think would you say that? I mean, we kind of touched on it already, but I mean, for me, now, honestly, obviously, I haven't been trading for nearly as long as you have, Paul. But with the social media, would you say that the today's social media world is kind of like destroying the idea of trading for new people coming into the space?
I think it just erodes confidence hugely, because you're always going to have those snake oil salesmen out there, you know, regardless of what bloody generation that you're ever in, or do you know what I mean, whatever sort of market you're in, or anything like that. But it's kind of like portraying this, hey, you know, look, put a few trades on, you know, piss off down the beach, you come back, you make profits, happy days, blah, 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 flash cars, this, watches, which is all bullshit.
It's not like that.
Yeah, I love when you see someone post you know, they're on the beach with the laptop. They're like, oh, I've traded 5 minutes today, made 5K before breakfast. Now I'm just gonna relax rest of the day. And people don't realize that rest of the day, that's when the real trading starts. You know, that's when the real work starts. You know, so yeah, I definitely agree with that. It's gives completely false expectations.
Well, that's the thing. If you're giving people false expectations, you're doing them a huge disservice. Do you know what I mean? And it's trading is a long-term thing. Do you know what I mean? It can be a career, and it's about cherry picking when you want to trade. It's not, like I say, it's not trading for the sake of trading. Oh, the market's open, I must be trading. It doesn't work for me like that. Especially, you know, if you're in the foreign exchange market, and you know, I've said this to Alex before, but I'll say it to you as well. You know, if you look at the two aspects of the foreign exchange market, commercial business and speculatory business, speculatory business isn't happening every bloody minute of the day. Commercial business is happening every minute of the day. Commercial business is traded by large conglomerates, importers, exporters, you know, things like that. And then you've got to look at that and say, well, these people are trading because they have to trade. Now, they don't care what bloody price they get. They just have to trade. So if you're looking at that and people say, oh, the market's really random, yeah, it is on a, you know, second by second, minute by minute basis. It is random. But when you get to certain specific places, that's where the randomness comes out of it. That's where the speculation occurs. And then that's where you sit there and say to yourself, right, bloody hell, this is where I want to be trading from. I have to be patient. And I think that's one of the really bad things about social media and instant news and instant everything these days is people have lost the art of patience, which is
for sure,
you know, which is what you need.
Before we go on to obviously the last conversation that we had, we went through a lot of the stuff that we're talking about today. The difference is obviously today we've got a lot more people that have got their own kind of questions that do want to ask you a question, and we've got a good platform for them to do that. But also, obviously, afterwards, we'll just push it over to you because I know you've got Trading View open for us to kind of see, like, technically as well, what we kind of trying to convey and what you normally do. But a couple of these questions, I don't know if a couple of people are asking of liquidity grabs in the market, especially on things like assets like golds. Have you ever heard of, do the institutions go after liquidity and try and look for areas of liquidity to get into the positions? How does it work like that?
Well, it's all about, I mean, this is the thing. So it's all about liquidity. So we want to be able to generate liquidity for ourselves. So what we're not going to do is basically teach our clients what we're doing. Because if you teach your clients what you're actually doing, then when you want to buy, so do they. So there's a liquidity dry up. So what can happen and what will happen, I won't read it out online. I will direct people to actually go and have a look at it. I won't read it out because I don't want to sort of get into any, you guys in trouble or myself. But what I want you to do is I want you to go and read some of the small print, right, in a report that you can get that's available, right? So I worked at a place called Sugden UK. Go to Google, type in Sugden, S-U-C-D-E-N, Sugden Financial FX Report. Then what I want you to do is I want you to go there, excuse me, click on that report, forget all the bullshit that's at the top and go to the bottom, right? The little tiny bit that in fine print nobody reads. What does it say within that report, right at the bottom? It says, we send you this report not on the basis for you to trade on our recommendations. Well, A, what was the point in sending out the bloody report in the first place if you didn't want to place the seed in people's minds, right? But it also says this report here doesn't come with any restrictions on dealing ahead. See, there's a bit of a clue as to what's happening, dealing ahead. So does that mean that I've already bought gold and then I send the report out?
Right.
So I've already bought gold. So then I send the report out, and it says in the report as a recommendation, or this is our thoughts and our views. If gold gets to this level, we think that the momentum will take it higher. So we may be looking, I mean, we may be looking to buy into that strength. So you've planted a seed in somebody's mind that says, oh, right, okay, well, look, I'm not going to look where we are currently. I'm going to look up here. And so when we get there, they go, oh, yeah, remember that report. They reckon that the momentum was going to continue higher. Now, if you get someone like Goldman sending something like that out, right, what happens? People take a lot of notice of it. How do you generate liquidity? You do the opposite of what you're saying. You do the opposite of what you're telling everybody else to do, because you've already bought, they want to buy. So you can sell to them, can't you? You can close your position out.
A good example. Sorry about it, mate. I was just saying, we've got a good example on Bitcoin. If we just look at Bitcoin for the last year, before the ETF stuff happened, you had all of these major guys on Twitter, all major news outlets bashing Bitcoin, saying it was a useless asset, saying that it shouldn't be, it's super risky and people are losing money. All of that time, you've got all of these big firms buying up Bitcoin, and you can see how much accumulation there was just by looking at the chart. And now suddenly everybody and their grandma have just suddenly found out that, you know, there's this ETF and now everybody's buying it, and now Bitcoin is all the way all times high. Now, if you just think about it, they're going to start selling into all of that liquidity now at the all times high. Now everybody's buying into it. It's just what they're doing. Yeah. So that's a good example.
Yeah, and you look at it again as Bitcoin, but then go back a few years with gold. Right, so every Tom, Dick, and Harry out there, every bank, you know, so there's Goldman, you got JP, gold through 2000, it goes to the moon. Right, so what happens? The gold gets up, goes through 2000, and then they've already bloody bought it around about, you know, let's say about 1800, 1750, 1800, but it gets there, it goes to the moon. It's a great example. So you see it gets there, and it gets through 2000, and it goes, bing, bang. Yeah, you've all bought. Thanks very much. You've helped us close out our position. And actually, you know what? We've probably actually got ourselves short now. So now we made money on the way up. Now we're making money on the way down. And then the next time it got back there again, it was gold through 2000. It goes to the moon. That's what you said last time. Definitely going to happen this time. What happened? Bing, bang, straight back down again. And then what happens? Gold through 2000, obviously we made a new recent high on gold, but gold through 2000, it goes to the moon. Yeah, but you said that the first two times. Yeah, it's definitely going to happen this time.
So you're basically saying, so you're basically saying, like, let's say I'm working at Goldman Sachs. I have a huge position on, let's say, gold. And I'm not telling anyone about that position, but I'm sending out a report, and I'm not recommending people to buy gold, but I'm saying that this would be a good place to buy gold if it does this and that. And then it does that, and I'll be selling my position to everyone who's not taking my financial advice, you know, to buy gold. It's guys, like, if you're listening to this, like, you got to realize that this industry has a lot of smells weird in a lot of places in this industry, and you got to be careful, right? That's basically what we're saying here, right?
What are the markets there for? It's not the market's there to take money out of one pocket and put it into the other. It's a sharky business, and I think it always has been. But I feel like the reason why people ask these now is because I think in the retail industry now, you've got things like ICT that teach a lot about liquidity grabs. You've got, like, on smaller time frames where price goes to one area of demand or supply, and then, you know, takes everybody's stops out and then goes the opposite direction. So that's why I think people are looking at liquidity in those areas. But that could just be because a lot of people are just having orders, you know, under the last highs and under the last lows, you know. So I don't know.
Yeah, I mean, well, that's the thing as well. I mean, there's this paranoia in the retail market that institutions are basically plugged into all of these bloody retail brokers, and they're going, "Oh, look, Mr. Smith, you know, Mr. Brown, Mrs. Whoever. Oh, look at all these positions. Come on, let's take all of those out. Come on, let's not be stupid."
And it doesn't work like that.
You're not even on the radar. You know, sorry to be horrible, but you're not even on the radar. You're not even in our thinking, our thought process. But the other thing is think about it. When you place an order in the market, all right, you go, I want to buy here or I want to sell here. Right, you don't tell me where you want to take your profit because you don't set that, but you do tell me where your stop loss is because I need to know that. Yeah. Now, you could give me an order without a stop. Yes, you could, but the majority of professional people will obviously say, no, you know, look, when the pain gets too much, I need to stop this trade. Right, so they'll give you stop. So if you know where they all are, now, of course, you're not allowed to gun for them. That wouldn't be very nice. But if natural market forces meant that the market rose and then all of a sudden it triggered through a level and then bum, 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 all your stops went, I may.
Natural market currency talks in the pub. Are we talking about?
You know, we did see some very weird moves on gold, like I think last year on one of the bigger brokers, and got a bit of a situation there and discussion about that, you know. So yeah, definitely. I mean, we kind of know that those sort of things might be going on, you know, be behind the scenes.
Allegedly.
Yeah, exactly. I want to ask you, have you just before we move on to the questions here that we have in the chat? So SMC, smart money concept. So there's this big thing right now on social media where there's this. A lot of people are selling a lot of different courses on smart money concepts, saying that this is the way the banks trade. And they have all sorts of different price patterns and indicators that tell people, buy this course. This is exactly how the banks trade. Now, I've actually seen some of the stuff you have where you talked about some of the, and we're probably going to go into this when we look at your trading view. But the banks, they don't really sell when RSI is overbought, do they?
No. I mean, this is the thing. You know, God. I mean, I've been saying the same bloody things for like 8 years now. Right. It is not based around indicators. It is not based around fundamentals. It's like, right, okay. Technical analysis was only invented with the invention of computing power, and obviously markets didn't bloody open when, you know, Bill Gates pulled his finger out of his arse and give us, you know, Windows 95 or Windows 98, right? That didn't happen. So obviously they go way back. So, I mean, if I was to use the metal exchange as an example, right, opened in the 1870s. Now, think about that. Do you know what I mean? Opened in the 1870s. I remember teaching a guy in Texas, right? And I was like, yeah, the metal exchange opened in 1877. I said, right, just look out your window and picture Texas in 1877. I said, what do you see? And he said, well, first thing, it was still part of Mexico. And the second thing, there's nothing here. Do you know what I mean? There was literally nothing here. It's the Wild West. I said, yeah, but this opened in 1877. I mean, how on earth do you think those guys traded, made money, and turned it into the world's biggest non-ferrous metals market? It can't have been on Fibonacci levels, and it can't have been on RSI, and it can't have been on Elliott waves, and it can't have been on any of this technical bullshit that's come out with the advent, with the, the invention of, like I say, decent computers. So what is all of that stuff there for? I mean, I've touched upon this many a time. I'll just rehash it again. But they're basically there to describe previous market moves so that you can tell a story. So an analyst's job is to tell a story. People like listening to stories, right? And they look at all this stuff, and it's kind of like, if you're paying me millions of dollars in commission a year to trade, right? You want to see a little bit back for your outlay. So, we hire all these analysts and they send all this shit out, and, it's just window dressing. It is literally just window dressing bullshit. It's like this big fucking merry-go-round of, you know, and it was great in the Wolf of Wall Street with, you know, Matthew McConaughey. It's true. It is just like a carousel, right? Some people are going to jump on, some people are going to jump off, but you have to keep this thing going. And the whole financial system is about drawing people in, right? We want to make money from you. We know how to make money from you. You don't know really how to make money, or you might get lucky and you get in a bull run and you buy stock. You know, if you look at, well, we look at Japan, we look at that in a while, but you can get lucky, right? But the majority of the time, the house always wins because we set the rules of the game. Now, just talking about this ICT and these smart money concepts and all this shit, we had comments at the bottom of the last video that we did. Oh, this is what ICT's been saying for years and blah, 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 blah. All right, okay. I haven't looked into it. I don't need to. I wouldn't personally want to waste my time doing it. Now, again, that might sound a bit arrogant, but look, boys, I've been in this, you know, industry since 1994. I don't need to go and read and, you know, look at any other things. But it's liquidity grabs. Where are they? Order blocks. Well, can you see them on your chart? No. So it's just, I don't know.
Yeah.
21st century fucking, I don't know, 21st century.
I think most of these techniques just come from the main, you know, the main. I don't know what ICT is too much, but I think a lot of people trade with just basic support, resistance, and supply, demand, whatever you want to do, and they just, you know, make it into their own thing with their own aims, their own setups. I think that's what they sell, and if it brings more people into trading, well, that's good for us, and I'm happy with that. One thing I did want to ask was, this is a couple of questions. What are your insights about the uncertainty between the BRICS countries and the G7 financial systems? Is it affecting the Forex market? How is it affecting the Forex market?
Sorry, mate, you just cut out a little bit there. Can you repeat that?
Yeah. So he's asking, with the uncertainty with BRICS and the G7 financial systems, how is that going to affect the financial system, like the FX, the foreign exchange markets?
I mean, I'd look at that, probably make it a little bit more volatile. You know, but we're in a period at the moment of what I would call sort of fundamental flatness. Nothing's really sort of been, I don't know, how do you say it? Sort of nothing's sort of kind of been set in stone. You've been looking at, you know, sort of the top G7 countries, all been pretty much following exactly the same path. We've had interest rate hikes, obviously, with the countries been trying to get inflation under control. That seems to be coming down. Now it seems to be a clamour to, right, we need to be cutting interest rates. You've looked, you know, Wall Street's kind of screaming at the Fed to cut interest rates, but obviously they're two separate entities, so the Fed doesn't have to do anything there. But I just think we're kind of brewing at the moment for, you know, we've had quite a bit of volatility in the last few years. It's like I say, it's kind of gone a little bit flat at the moment. Everybody's eyeing up the Fed and they're like, right, as soon as they do something, we'll do the same. You've got a complete opposite of opinion in Japan. I mean, for me, I think the Japanese have played a blinder at the moment, if I'm perfectly honest. They're you know, steadfast in their sort of monetary policy. They've let the yen get weaker. They have, you know, helped Japanese companies sort of generate huge profits. You know, they're selling things like it's going out of fashion, and you know, they're sort of sitting there and just like, well, look, this is good for Japanese companies. If you look at the, you know, if you look at the Nikkei at the moment, you know, it's making new highs. You know, you've got to look at it and just say, again, we need volatility in markets in order to make money. We need, well, put it this way, America hasn't had a war for the last 3 presidents. I mean, Jesus, they're definitely due one. And, you know, war is good for industries. Yeah. You know what I mean? So it's good for markets. I mean, I think you could sit there and overanalyze everything to the nth degree. But then again, you know, if you kind of take yourself out of it and say to yourself, right, if I overanalyze everything, I'm overthinking everything. If I just kind of sit there and say to myself, right, again, patient, wait for levels. When you get there, hedge, Market goes up, market goes down. I don't give a shit which direction it goes in. I could sit there and write a full bloody massive report, but then that's just my opinion, and quite frankly, who gives a shit about my opinion? Do you know what I mean? You've got people talking about central bank digital currencies. Is that going to change the foreign exchange market? No, currencies still need to be exchanged. And if you really think about it, money's electronic anyway. Do you know what I mean? It makes no bloody difference, really. You know, the amount of cash in the world in comparison to the amount of, you know, electronic money is minuscule. So, I mean, I would look at it and just say things will continue. Business continuity. Doesn't matter what happens around the planet. Because, you know, if you go back and look at charts that go back, you know, maybe 50 years or something like that, think of all the things that have happened between then and now, and then think about it and say, you know, has the value of money changed? Physical money, yes. But then if you look at a market, and again, we'll talk about Japan, let's look at the yen. So if I'm going back to the late 80s, very early 90s, and then I look now, and we're at the same price levels, I want you to really think about, right, the value of money back in the very late 80s to the 90s to the value of money now, real physical money that people have an emotional attachment to, right? It's totally different. So how can the value of the yen be the same now as it was back in the late 80s, early 90s? See, that on face value, that doesn't make sense. But then if you turn around and said, this is actually just one big giant game, and we don't really care where the yen is relative to the dollar, all we want to do is trade it and make profit. Again, you could look at that from a, you know, an economical standpoint, and you could write lots of papers. And again, it's all overthinking for me. I like to keep things really, really simple. But to just sort of sit there and say, well, how can the market be reacting to the same places, right, now as it was 30 years ago, 35 years ago, 40 years ago? How can a market do that? Because surely things have changed. They might have changed from the, you know, from the outset. Sorry, from the outside, but on the inside, it's just like, no, we're just using the same prices within which to trade, and all we're going to do is just keep continuing to do the same thing year after year after year after year, and that is basically, you know, sort of some of the rules of the game. You just got to understand, it doesn't matter what generation of trader you are, whether you're 80s, 90s, 2000s, 2010s, 2020s, the rules of the game don't change. And if they did, and if they were constantly changing, like fundamental situations, it would be impossible to teach a younger person how to trade, because you wouldn't kind of sit down, walk into a bank and go, right, there you go, Alex, sit down, mate. Here's a $10 million account. It's all based around technicals, pal. Go and figure it out for yourself. Wouldn't happen, right? Or you walk in and they go, right, fundamentals. It's all about fundamentals. Sit down. There you go, $10 million account. Go and figure it out for yourself. Oh, by the way, every single fundamental event is completely different and it's a separate thing, but, you know, good luck. Or would you sit down with somebody and go, right, these are the rules of the game. This is where we've been trading from for decades. You may or may not get to trade these levels. It depends where the market goes. But if I could then sort of have like this framework, right, and this kind of roadmap and go, right, there you go. You take that. You'll be trading these levels. So, I mean, if you think about it, so if we're here on the yen then and now, you've got traders, right, in the 90s, the 2000s, the 2010s that have never seen these prices, never traded them. But then we get to the 2020s, and then what's happening? Well, we're reacting from the same places. So could it just possibly be that, like in any business on the planet, business continuity is you teach the younger generation how things work, and all they do is they just carry it through. So very long-winded answer.
That's what you basically they do in the institutions that you work. They took levels and they took, you know, techniques, and they just passed it on to you guys, and you've just done the same thing, and that's what goes on.
Well, it's like any walk of business, any business, isn't it?
Yeah.
Do you know what I mean? It's like any business. If you looked at, you know, if you looked at like a bricklayer or something like that, you go and learn how to, you know, build a wall. I mean, that fundamentally hasn't changed for thousands of years. And it's just business continuity. It just keeps going and going and going and going, because it's a case of if it ain't broke, don't fix it.
So I think people people will want to maybe see some examples of what we're talking about here. So
Yeah.
you know, if the banks are not using RSI, fib levels, then what are they doing in terms of technical analysis? Are there any, like I have my ideas, you know, with the fundamentals of TA, keeping it simple, but I think you're the right person to go through that.
Okay, so let's have a flick over to here then. Hopefully this is going to work. Does that work? Can you see that?
Yeah, we got the Nikkei on at the moment on a monthly chart by the looks of it.
See the mouse moving and all that malarkey?
Yeah, perfect,
Yeah.
mate.
I just zoomed out, by the way. It's insane. It's broken above the 1989 highs. It's just really reclaimed all-time highs here.
Yes, it has.
Yeah, I don't think I've ever looked at that chart before in my life.
Okay,
That's crazy.
Right. So if we looked at it here, so what am I basically doing? Well, I'm looking at prices, right? So there's certain things that I look for on a chart, and I'm just looking for, it's just pure price and a reaction to price. Now, again, this is what when I teach people, I say, you know, we're acutely aware that this thing down the bottom, it's called time. It passes. It doesn't exist in trading. You know, it doesn't exist at all. What does exist is price and value of particular prices. So if I'm looking here and I go, wow, look, the Nikkei is making new highs, I need something to compare that to. So if I was to go back over here, right, so if I was looking at this Nikkei here, my starting point would be, where are we in 89.90? So I go right to the top and I go, okay, let me mark that level. And then I come over here and I go, aha. So this candle here is what I would say to you is a conscious decision by the market to change this value. So if I was to say to you that this value here was expensive, why? Well, the market got here, stopped, and then retreated. All right, so I would say that was overvalued here. All right, so it's expensive. Now, a conscious decision has been made here to make this break that particular price there, close above it, which then tells me, well, it's now got more impetus to move up. Now, if I then drop that down to a week, right, now what can I see? So now I see the market coming up, breaking, closing above. Now what's it done? It's basically come back to check. But guys, we still, you know, cheap here. We're still sticking, you know, a valuation of cheap here. Yes, we are. Okay, bang, up. So I got the same thing that happens if I go back again in the past, right? So then I go back here and I go, okay, well, look, back in again in November of 89, that was a previous high. Yeah, that was its previous all-time high, but that was its previous high there. And I go, okay, so what happens if I put a level there and then if I go back to the week, I got to scroll back a bit, all right, and then I look here and I go, right, up, reject, close, above, up, sorry. So this is, I mean, this is just, it's so simple. That's the thing. I think that's the thing that annoys a lot of people. It is so simple. Let's just get over here.
It's just level to level, like everybody has, you know, said. You got level to level. You mark out the levels, and especially on the higher time frames, and whatever that level actually, whatever the price does on that level is what you, the trade that you take. But you use a hedging kind of technique.
Always. Do you know what I mean? Always hedge, right? You've got to sit down. You're going to do that. You've got to sit down and say, okay, so you know, generally, if we break a level, how far past do we go past it, right? Before we turn around, because then I can sort of sit there and go, right, okay, so that's sort of how I want to be sort of setting up my stops. Take profits. Would I always go from level to level? No, not necessarily. Again, that's about trade management. I would aim probably for around about halfway, because then again, if I look here, right, at this halfway point, and just whack that in there very quickly. If I look at this halfway point, what can I see? I can see the market's reacting to this. So could this very well be the thing that we talked about earlier, where I've traded here, I send the report out, it gets to here, client starts to buy, ultimately it comes back again. And then we have the same run out, and then at some point it will take this price out and basically go above it. So if I look at that, it's the most simple thing on the planet, right? It's so simple. So that's the Nikkei, right? So if I then went and said, right, because we spoke about it before, so dollar yen, right? And again, let's go to a month. Let's go back and have a look at the same time period.
I
think he pressed the wrong window. I've done that as well. You know, you press, instead of pressing the screen, you press your camera. See if you can get back.
I took a shot on gold.
Really? No way. Did you? Did you?
Yeah, quite a bit heavy though. Yeah, probably gonna close it.
Man, we just talked about gold, how you're not supposed to touch it. You're like, I'm not going to touch gold. I'm not touching it.
Do you know what? If you looked at my screen, you realize why you would have touched it. Why you would have touched it? See that?
All right.
Obviously that.
Dude, I really want.
Obviously as well. It's even on.
Oh, maybe we can add him. We should probably we need to add him.
He's back.
He's back. Hey.
That's it.
There we go.
Welcome back, man.
Got you back.
Again, this bloody computer is driving me crazy. Right, but then let's have a little look then, right, and say there. So let's go back and go. So this blue line here kind of represents where we were on the Nikkei when it made its all-time, or its previous all-time high, I should say. Right, so that's here. So that's December of 1989. Yeah.
Mm-hmm.
So then I say, right, okay, well, the stock market was going up and up and up, and the yen got weaker. And then I say, okay, so where did the yen get to? Up here, around about 160. Right. And then if I said, okay, so roughly there, roughly here, roughly here. Right. Okay. So what I'm then looking at is I'm saying, right, so this is all the way back in the 80s and into the 90s, right? So market is doing certain things from certain places. I then go, right, well, okay, let's have a little look there. So I go, right, so that's August of 1990. What's the high? 150, 160. The next time I got here, right, which was this particular level, so we're looking at this one here. What did the market do? Now, bearing in mind, this is October 2022, so this is 32 years later. What was the high? 151, called it 95. So how on earth is the value of the yen the same now as it was all the way back in 1989? It doesn't make sense at face value. Unless you said it was just a one giant big game and all we've been doing is just been doing the same things over and over and over and over again. Right? Which is just letting things play out. Now, if I was to say, if I looked at the Nikkei and said, right, now the Nikkei is making new highs, and then I could say, right, well, the Bank of Japan, quite happy at the moment for the yen to be fairly weak. It's got potential to reach up to that 160 level. It's got potential, but would they let the yen get that weak? Most probably not. But what they're waiting for is basically the Fed to make the first move. So they don't have to actually do anything. You know, and if it means that they change their monetary policy stance and it makes the yen a little bit stronger, then so be it. But all that's happening is these markets are split up into ranges. All right, so roughly, yeah. And then with institutional level kind of like training, when you first get into the office and they start, you know, they're breaking everything down of how they like to trade, is levels of support and resistance one of the main fundamental things that they teach you to find first, or is it something else that they make you look at? Well, basically, so I mean, look, I mean, if I looked at that, right, and I got in and I said to myself, right, so what's this market doing? Well, it's just ranging between these levels. That's all it's doing. It's not doing anything, you know, spectacular or anything like that. That was, I don't know how you bloody move this thing. Right, there we go. So if I'm just looking here, all I'm going to do is I'm just going to play these ranges. right? So then, you know, when you sort of first start out learning, it's like, right, well, I'm going to look at a chart and I'm going to look for specific things. And you're taught what to look for. So, I mean, if I was to sort of sit there and say, right, break, close above, pull back, bang. But it's all about value and previous value and current value. So if the previous value was expensive all the way back there, you know, like I said, in the late 80s, early 90s, and I get there and I see this, bang, same reaction. Okay, right, okay, well, that's interesting. Let's have a little look here, you know, across here. So when I broke and closed above it, what happened? Well, I came back and bang, same reaction. Then I broke and closed below. Okay, so now what am I looking for? A reversal away from there, basically. Now, I might not always get one, but then again, if I break and close back above again, I'm looking for another move away from this level up to the top of this range, break, close below here, changes value, comes down, hits the bottom of the range, bounces back up again, reverses when it gets to the top on some profit taking, basically breaks and closes above it again, goes all the way up here again. At some point, you know, it's either going to break, close and go up here, or it's going to come back down here again. And it's so simple. It's ridiculous. But I mean, again, that's
right. Let's see. Is he gone again? Wait, yeah. Device not connected. Probably gonna get
back.
Yep. Yep, there it is.
Back again. Sorry, guys. I'm gonna throw this thing out.
Yo, I had a quick question. So right now you're adding the levels on the higher time frames. You're looking at the monthly and the weekly, but I've also seen that you've gone down to the daily. So are you obviously you're doing a top-down analysis, but is there a limit to how far down you'll go? I know you're probably not going to look at 1 minute, right?
God no. I mean, I'm looking at. So the reason I'm doing that is basically to say, look, this is where I derive my levels from. So it's going to be on a monthly chart always, because a monthly, you know, the end of the month close is very, very important for me. Come down to just a week, just to sort of show you kind of what that looks like. Come down to a day so that you can get a little bit of a clearer picture of how that kind of tracks. But I don't trade from a time frame. That I really must stress that. It's not about time frame. It's about a price, not a time frame. So time does not exist. Right. So if I was to say to you, I mean, again, we could just go and look at anything. Right, boys, pick me a stock.
Bitcoin. I was going to say, you know, we're all long to our knees in Bitcoin, and
right.
You know, we're all degenerate speculative gamblers here.
Well, you definitely are with the
I'm talking about
altcoins
myself,
and everything.
definitely with all the altcoins and stuff like that. There's probably not a lot of history that you could get with this, but
probably not too much. And again, I'd look at a month.
Those monthly levels. If you see that that massive crash we had in 2021 hit that the all-time high of 2018, and then you've seen the reversal. So that's where I can see Bitcoin is quite technical when it comes to these big macro levels, which is basically what the things that you're talking about now with how
so I mean, look, we've got 1, 2, 3, 4, 5, 6, 7 levels I'd look at on Bitcoin, and I wouldn't bother with anything else. But then I put that on a week and I go, right, that is a beautifully clear picture. And do you know what I mean? I've been doing it. It took me seconds to do, but that's a beautifully clear picture. I look at that and I go, right, where do I want to trade from? All-time high. I mean, that's like a given. But again,
you guys, you hear yourself, buy Bitcoin. That's it. That's
I didn't say
that. Yes, he said buy into his liquidity. He's got his order. He's got his sell orders right up there, guys.
But no, that's the thing. So I mean, look at the ride from here to here, and then up to there, and then look at the ride from here to here and up to here. But no, you're right. You know, if everybody out there is going to do the same thing, which is basically be buying Bitcoin, it will go and make new highs. What I want you to notice as well, though, boys, look at the distance between these levels.
Yeah.
They're very consistent. Right? Very consistent in their makeup. So we could be really, really stupid, couldn't we? And I'm not saying that this is where Bitcoin's going at all. This is not financial advice at all. I've never traded Bitcoin in my life, and quite frankly, I never will. But I mean, if it's going to be consistent with the distance between its levels, so basically how it's cycling basically is how I would describe it, then if you break here, you've got potential to somewhere kind of up here. See, now, if I was an institutional trader and I sat there and I had a nice long position, what would entice even more people to come in to the Bitcoin market? Breaking an all-time high. Yeah. Breaking an all-time high. And it's like everybody's go, oh my God, look at this. It's all over the media. It's all over social. It's all over this. It's all over that. It's going to the moon.
That's when Goldman Sachs goes out with their not financial advice to buy Bitcoin, correct?
Of course.
Yeah.
Of course. But
yeah,
then
we see it every time, every cycle. I've been in most of the Bitcoin cycles, and every time we see, we see the banks come out and they say like, Bitcoin is dead, right? At the bottom, Bitcoin is dead. At the top, Bitcoin is more alive than ever,
Yeah, of course
every
it is.
time.
All right.
Yeah.
So then you got gold. Right, then you've got gold, right? So you come over here and you go, okay, let's have a look at this. I mean, so this is for want of a few bucks, right? So then let's whack on there's you go. There's a price of 2,000, right? So what's going on here? Well, if I was an institution, I would have been buying sort of roughly round about here. Why would I be buying roughly round about here? Well, if I go back over here to the financial crisis, yes, we're above, then we're below, bang, reject, bang, reject, bang, reject, bang, reject, get here again, bang, reject, then I know, right, break and close above through here, basically market goes up. All right, it's got free scope to do that. And obviously, look, we know what was going on in 2020. Right, so what happens? So the market breaks and closes above here, it's up, and then you get to 2,000. And what comes out of the institutions? Gold through 2,000, it goes to the moon. I bought here, you're buying here, I'm selling. Bang, there you go. Right, this is what we were talking about earlier. Gold through 2,000, it goes to the moon again. What, really? Yep. Boom, down. Breaks and closes, it does it again, right? And then goes all the way up here, makes a new high, and we're very sort of close here again. So that previous all-time high. But you look at that and it's just go back and have a look at the reports. Do you know what I mean? Go and have a look at the reports that were out and available at the time. What were they saying? They're not telling you what they're doing. Yeah.
Right. So
they're doing the opposite.
I'm interested in it's pretty, and then, obviously I haven't looked at the reports myself, but I've seen it happen a lot of times. Like there is FUD does exist, and I think when it comes to like adding the levels, that's I mean, obviously you're adding levels, just add price levels, very simple. You have a obvious place where price comes into resistance, that's a level, and then support, same thing. What about trends though? I mean, what about looking at primary, the idea of looking at primary trends and secondary trends? Is that something of interest, or is it only price levels?
Just price levels. Yeah, I mean, for me, it's just that people say the trend's your friend. I say that's bollocks because you only like it because it rhymes. Right?
Yeah.
Because a trend can stop and reverse at any bloody particular point that it wants to. And when will when will it do it? I mean, yeah, look, markets can continue. They can go up and up and up, like Bitcoin at the minute, up and up and up and up and up. And you go, oh, it's in an uptrend. Yeah,
all-time highs right now.
Yeah, great description. It's in an uptrend. Brilliant. It's a great description, but that can chop and change at any time. So I said to people, go and do it yourself, but sod it. Let's do it here. Right. Okay. So, love you, Sugden. Give me some very, very good times. Love you loads, but let's have a little look what this says. In this report, This is a marketing communication. Forecasts are not a reliable indicator of future performance. The information in this report is provided solely for information purposes and should not be regarded as a recommendation to buy or sell or otherwise dealing any particular investment. Why are you sending it out in the first place then? What's the point? Please be aware, where any views have been expressed in this report, the author of this report may have had many varied views over the past 12 months, including...
I love that one.
Right? A large number of views are being generated at all times, and these may change quickly. Any valuations or underlying assumptions made are solely based upon the author's market knowledge and experience. Please contact the author should you require a copy of any previous reports for comparative purposes, so you can check how many times he or she changed their mind over the past 12 months. Furthermore, the information in this report has not been prepared in accordance with legal requirements designed to promote the independence of investment research. All information in this report is obtained from sources believed to be reliable, and we make no representations as to its completeness or accuracy. So basically, it could be bullshit, but we don't know. This report is not subject to any prohibition on dealing ahead, which means I can deal ahead and then send the report out, right, ahead of the dissemination of investment research. Accordingly, the information may have been acted upon by us for our own purposes.
So basically, they're pumping their own bags, is what they're saying here. They're opening up to say, like, this is not financial advice. We might give you, you know, different opinions on this during the year, and we may or may not hold what we're recommending to buy or sell here, right? Yeah.
So we might have already traded ahead, and then we send you the report out, and then we plant the seed in your mind, and then you go, oh yeah, I remember that. This is what they said.
Sorry, you know, I'm interested to hear you talk about hedging, right? So when I think what people would be interested in is how. Now, in theory, this all makes sense. You add the levels, and you look at these levels, and then if price, you know, is trading above a level, that would be, you know, a good place to be buying to the next level. If I'm not, you know, mistaken. Now, how? And in theory, this is simple, but we all know in practice trading is way more difficult than what it is in theory. So when you're looking at hedging, how do you actually, when let's say price hits a level, it closes a weekly candle above that level. Now, how do you prepare to actually make money on this move?
I'd set my trades up in advance. So that's the thing. So when you mark out all of your levels, then what you do is you put your orders in ahead of the time, right? I mean, again, knowing especially within the foreign exchange market, your orders can be executed at any time. So with a hedging technique, again, I since I last spoke to you, I worked with this absolute bloody genius that's created an algorithm for me, right? And also created an algorithm that basically will go through and say, right, this is your optimized take profit, this is your optimized stop loss level. So if you already know that, then what you do in advance, excuse me, is I would load my order up. I wouldn't be scared to do it, because I'd have to look at that level and say, right, well, the market is going to do what? It's either going to go up or it's going to go down. You know, again, do I care in which direction that actually goes in? No, I don't. Does it make any difference to me on a personal basis if it goes up or down? Doesn't make any bloody difference whatsoever. Yeah, whatsoever. Yeah. If I do that and I hedge, I take my ego completely out of the game. I don't want to be trading in one direction.
I like the idea of hedging your position, and it's something, you know, it's something I've been looking into a lot. Now, it doesn't really fit well with the way I'm trading today, but I like the idea of, you know, opening a position and then just waiting for a move, you know, and it doesn't really matter in what direction that move comes. If you're hedged, you're going to make money on that move. I think that is it's a beautiful way of trading, and it's a beautiful way of, like you said, removing the ego, because it doesn't really matter what the direction of the move is. You'll be able to make some money on that anyway.
Yeah, so it's about taking your.
Yep. It's just gone. Euro, bro.
Dude, what the fuck? I looked at that move and I'm like, I'm getting alerts and I'm like, we were long.
Back again.
Well, we were long until we were.
Welcome
There
back.
you go.
Welcome back, man.
Actually, I'm going to throw this computer out the window in a minute.
No, man, you can. I'm sure your kids are gonna have a fun time gaming on it, but maybe you shouldn't be trading on it. Dude, so yeah, so one thing I wanted to ask you is we've talked about TA, but when you're adding your levels, I also see you take the macro into account, right? Do you what is the news aspect of this? Do you trade the news? Do you care about the macro? Like what's
I mean,
the deal with that?
Yeah, I mean, you could look at that and then say, oh, God, there's lots and lots of news. Everything's going on. Do I trade? Do I not trade? Again, think about it. Teams of analysts at banks, some of them paint bullshit stories to send out to clients and others sit there and crunch numbers. So if you can, again, pretty much forecast what things, what numbers are going to come out, say NFP or something like that, right? So it comes out and then they're like, look, if it comes out within a 50K ballpark figure here, either side, well, that's not really going to affect the current value at the moment because we've already factored that in. So if you could reach a Zen-like state where you said, you know what, fuck the news, I'm just going to trade, right? News can create volatility. Volatility is our friend, right? So if news can make market volatile, I don't care what bloody news it is, if it gives me an opportunity to make money, then excellent. Other people might be slightly more cautious and say, hey, I don't want to trade around these news events. I don't want to open fresh positions around these news events. Again, I'd say to people, look, in the beginning, you probably don't want to trade around these news events because you might get slightly nervous. But if you could get to a point where you just understood that most of the information that is out there is already included in the current valuation by the people that set the valuations, i.e. institutions, then news doesn't really matter. The only time that we will do something to reevaluate very quickly would be an unexpected event. So if I were to say Brexit in the UK, if you remember Brexit in the UK back in 2016, it was priced in the institutions that there was no way on this earth that the British public were going to vote to leave the European Union. What happened? We voted to leave the European Union. So they were long and wrong. Yeah. Right, they were long and wrong. They had to get out of that position, but take that loss, right? Take that loss, get short, knowing that the value of the pound was then going to come down. And again, do you know what I mean? You can sort of trade your way out of that situation. But if something major comes along, then yeah, you're going to have this revaluation. But most of the time with the news, it doesn't really have that much of a factor. And again, you could analyze everything to the nth degree, but on a personal basis, I just think you're wasting your bloody time. Do you know what I mean? You've got to trade what's in front of you, because if you're forming all of these opinions within your own mind, again, that can lead you to trade in just one direction. I know, I'll just keep repeating myself, but do you know what I mean? You're bringing your ego into it, and I want to take my ego out of it because I am in control of the market.
Yeah, and I mean, you could easily. I mean, if you have a way of trading, you can easily test it to see how news and the macro events is affecting your trading. And usually the way I see it is, price comes down, it hits that high time frame support level, news comes out, it bounces or it moves to the downside either way. And in your situation, I mean, if you're hedged, then any type of volatility, bring it on. It's probably going to be, you're going to make money on that volatility anyway.
Yeah,
I guess that's the beauty of hedging.
Yeah, but that's how you make money, volatility. Sorry, Alex, go on.
Yeah, Paul, if you were going to teach your children now how to trade, what would be the first fundamental things that you would get them to do?
Well, here's your algorithm, kids. Here's your money. Get the fuck alone. Make money. Just leave it alone. We did this back. We did this back test with the algo. Set levels, set take profit targets, set stop losses. We went back to 1st of January of 2008. Played it out until the middle of August last year when, bless him, he emigrated, moved to the States, got a house, got married, did all of that kind of stuff. So I had to wait. It's kind of landed with me back end of last month. But then if you looked at it, if you'd have started with a 10 grand investment on the 1st of January 2008 and just basically just let this thing play itself out, not touch it, no influence over it whatsoever, it turned 10 grand into 768,000 over a period of 15 and a half years with no manual intervention whatsoever.
Yeah.
So you wouldn't teach them how to TA, nothing like that?
No, wouldn't bother. What's the fucking point?
Yeah.
So that's literally what the point of doing it. It's just, there it is. I've done it all for you kids. Just sort of,
Right. So what's your favorite F1 team?
Favorite F1 team? I think you probably kind of guessed.
Yeah.
You lost Hamilton though.
That was inevitable. He was always going to go to Ferrari at some point.
Yeah. Fair enough. We got a couple more questions, and then we're gonna let Paul go because we're gonna do the giveaway as well for you guys in a minute. So
before we move on, though, I want to ask you a question here on TA. So I mean, there are obviously people out there who are profitable. We got people trading for us here at the Fivers who are trading with a TA system. So there are people out there profitable with a systematic way of trading TA. But I think what you're more referring to here is like fake education, right? Like, or would you say that all TA is bullshit?
I would say if you're an analyst, that's your job.
Yeah.
So if you're a trader, it's bollocks. Right. I mean, this is the thing. So if you ever, you watch Bloomberg TV or something like that, and they go, right, we're going down to the new exchange and live on the floor, there's a fucking analyst, because the traders like, piss off, I've got a job to do.
Yeah. That makes sense. I mean, there's a difference between being an analyst and a trader. Absolutely, 100%. It's two different worlds. Yeah, definitely.
So
Alex,
I was just going to say, before we get into this last couple of questions, can I just tell you the funniest story of my trading?
I want to
go ahead.
Right. Hear some of these old stories because you made me laugh with some of these stories from the pub and stuff.
Yeah, right. So just imagine it's the early 2000s. Chinese companies are starting to do a lot more business on the London Metal Exchange. And we thought it would be a good idea to have a native Chinese speaker that could work in the office and obviously, converse and communicate with the Chinese clients a heck of a lot easier than the English guys, right? So a lady joined us called Kathy. This is when I was at Sugden, right? Lady joined us called Kathy. And she'd been there a couple of weeks. Right, now what I want you to picture is, okay, so you had the LME desk at Sugden, okay? Some of the guys stayed up in the office, and then loads of us actually physically travelled from the office to the trading floor in Leadenhall Street in London, right? 52 Leadenhall Street. And we would have lines of communication. So you'd have a guy sitting upstairs. Any business that the client-facing people upstairs had to do, they'd shout to this kid here, who would then send those orders down to another kid on the trading floor, who would then give those to the traders, right? So kind of like in real time. So in what we call the pre-market, so that's before we go down to the trading floor, Kathy's come over and she had some buying in the lead market, right? So scale down buying in the lead market. So I just really just think, right, so she had 500 to buy at 2000, 500 to buy at 1950, 500 to buy at 1900, 500 to buy at 1850, and 500 to buy at 1800, right? So this is 500 lots, times that by 25, and you get the amount of tonnage, right? Tons.
Wow.
It's been a boring day. Nothing is happening whatsoever, right? It's a complete snore fest. And then we get to the end of the day, right? And to the place where it's called the curve, which is basically when all metals are all traded at the same time. And all of a sudden, and this is what I mean, so sometimes it'll be really quiet and then you have to turn it on. Your brain starts to switch on. It kicks off and it's really, really loud. And she clicked in to this order phone upstairs in the office, right? The kid at the other end of the phone on the trading floor, she's like, I can't remember his real name, but she goes, Scooter. He's like, yeah? She goes, my red orders. You what? My red orders. You what? My red orders. Do you mean lead? Yes. My red orders. If you can't buy it, you can sell it. He goes, okay, drops the phone, goes running down to the lead trader, big fella, jumped up on his back, and he goes, cancel the lead buying, sell it. He goes, okay. So anyway, he jumps down, he runs back. Our trader's like, lead, 95 I'll give, 500. The bloke's like, no, I'll take 20. 95 I sell, 93 I sell, 90 I sell. Boom, 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 boom. He goes, right, you sold 500. I'll give you an average price in a minute. So he's picked the phone up again to Kathy. He goes, right, you sold 500. And she's like, no, 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 you can sell it. In the meantime, he's like, you sold another 500. No, you can sell it. He goes, we are fucking selling it. Right? You sold another 500. Right? And she's like, no, no, no. And he's at this point, right? Another guy up in the office, Rob Montefiore, who's still there, bless him, as far as I know, he's heard what's going on. He drops his phones in the office, goes running over, grabs the phone out of her ear, right? And he goes, she means cancel it. And you just go, fuck. He goes running down the front, jumps up on the back again. He goes, buy 2,500 lead at market. And he's turned around and went, what the fuck is going on? If you can't, if you can't buy it, you can sell it. Yeah, cancel it. Oh, that was hilarious.
Oh, it's beautiful.
Pandemonium.
Talking about communication breakdown. It's beautiful.
Yeah.
Trading is way
whoever's there was a smart person to bring in somebody that could only speak really Chinese and not being able to speak English properly. There you go. What do you expect?
It was it
but there you
was
go.
funny, you know what I mean? And we had, because obviously everything is taped, right, on a trading floor and up in the office, everything is taped, right? So like the kid was like pleading his innocence. He's like, she told me to sell it. She told me to sell it. So we're like, fuck it, we're going to listen back. That was just, it was comedy gold, just listening back to the conversation. You can't buy it, you can sell it, not cancel it, you can sell it.
Yeah.
I wish we had that recording. That would be hilarious.
Oh, it was brilliant. Absolutely brilliant.
Trading is way more easier today. Way more easier today. with the internet. Holy shit.
Yeah.
That is funny.
Probably not.
Has anybody got any last questions for Paul before we let him go, and then we can start the giveaway for you guys that have been waiting, and we'll get you on again, Paul. We can talk a little bit more about some of the stories, because I think everybody had a good crack. We needed that on a Monday evening, you know.
On the Monday evening, yeah, it's Tuesday, dude.
It's Tuesday, of course.
It's fucking Tuesday, man. You definitely needed that.
Definitely needed that one. Yeah.
Oh yeah. Well, Paul, thank you a lot for joining. It was great and very insightful. And yeah, thank you.
Where can people find you, Paul? Obviously, all the links for Paul's details will be in the description as always. But for people that want to just find you, LinkedIn, stuff like that, where can they find you, Paul?
PaulScottFX.com website.
Yep.
And
how much for your algo? People are asking.
How much for the algo? I'm not going to put prices on things on here, boys, because you know.
Fair play. Yeah. All right. Thank you very much, Paul. And we'll speak again, mate.
Yeah, it's not just an algo. Right. You understand why, how. Do you know what I mean? That's my own personal standpoint. Otherwise, it's
so PaulScottFX.com, correct?
And then on LinkedIn, if you just type in Paul Scott FX, you might find me. I don't know. I don't do social media. I don't do anything like that. You know.
No, you're on LinkedIn. I got your tab open here on LinkedIn, so you're definitely there. Hopefully, I'm not watching the wrong person though, but I think it's you.
No, it's you. The first person that will come up. Thank you very much, Paul, and we'll speak again.
No worries. Listen, thanks very much for having us on. Thanks for listening, and look forward to it next time.
Cheers, mate.
Fellas, yeah.
Take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the Fivers. We'll see you in the next one.